We gotta face it, borrowing has become a routine today. If you want a car, you just borrow some cash. Planning a vacation? Get yourself a vacation loan. Want a new toy? Slap it on the credit card. Real money? Who needs it anymore? This must be an okay deal, right? Wrong, of course. Have you ever stopped to ponder why we borrow? Or how to make sure this decision is a sound one? Well, let's figure it out. Debt culture refers to how we, as a society, view borrowing and handling money. It's the idea that taking out loans or using credit is totally normal for things like buying a house, going to college, or getting stuff we want. This mindset is fueled by easy access to credit, aggressive financial marketing, and constant comparing ourselves to others. It's especially relevant to the United States, where your credit score has become some kind of social ranking, like in this episode of Black Mirror called Nosedive. As entrepreneur Jason Saltzman said in his Rolling Stone article,
"We value credit score over quality of life."
In America, people owe a crazy amount of money. According to the Federal Reserve Bank of New York, household debt reached $17.29 trillion by the third quarter of 2023. While mortgages are steady and car loans have even decreased, credit card debt has skyrocketed. Americans opened 25.9 million new credit cards in 2022 alone. Almost half of them owe money each month, with an average interest rate of nearly 20%, making it hard to pay off. 70% of surveyed said that they can't pay it off the current year, 20% think it will take over 3 years to clear their debt, and about 8% are unsure when they can pay it off. But Americans are not alone on that boat. In high-income countries such as Canada, Israel, Iceland and Japan, there are even more credit card holders. However, these countries tend to carry lower average balances. In Canada, for every dollar of income, folks owe $1.71. That's not exactly pocket change. Switching to Australia, the total household debt there was over 116% of the country's nominal GDP in March 2023. A lot of loans too. As for Europe, it's a mixed bag. Countries like Denmark, the Netherlands and Switzerland are comfortable with that, while Germans still prefer cash due to their concrete over abstract mindset. But in Italy, the tendency to avoid loans is more practical. High fees and limited availability make credit cards less popular. In 2023, household debt stood at 47% of GDP for the European Union as a whole. But even in poorer countries of Eastern Europe, borrowing is still a big deal. Many low-income families have to take loans just to get their children ready for school. Henry Ford once said,
"It is well enough that people of the nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning."
And I cannot argue with him. Banks and credit card companies are the real mafia. See, one of the most efficient ways to make money is by making people your essential debt slaves. All you need to do is lend them money at an interest rate and then sit back while they work to pay off the loan. You'd want them to take out a huge mortgage to keep them trapped for most of their life. Or get a really high interest rate so even a small debt keeps them stuck in a cycle. And credit cards are the perfect tool for doing this. The average American adult holds 3 credit cards, and the typical family owes over $8,000 in debt, mainly from late payment penalties. As per the Federal Reserve Bank of New York, the total credit card debt in the US hit a hefty $1.129 trillion in the fourth quarter of 2023. The conundrum of this situation is that many folks willingly get trapped in it, often by giving in to easy temptations. And just like traditional slavery, it hits minorities, the less educated, and the poor the hardest. But even a lavish prison is still a prison. A person in debt slavery never gets ahead, since as soon as one debt is paid off, another one pops up. They never own anything, they only owe. In today's fast-moving world, we want things now. So many of us are ready to sign their lives away for shiny stuff like cars, TVs, and clothes just to satisfy those immediate desires. Loans can create an illusion of financial freedom. By paying with a credit card, you disconnect yourself from the pleasure of buying to the pain of paying. It feels like you're getting something for free, even though logically you know that's not true. Then, there still is the good old keeping up with the Joneses thing. Folks often get loans because of social pressure, whether it's for a lavish wedding, a big house, or the latest gadget. In the age of social media, when everyone's achievements are on display, the pressure to keep up can be overwhelming. Cocky influencers are all about showing out their luxury lifestyles, frequently promoting the products of the very advertisers who found their lavish ways, which especially hits the reckless younger generation. And you can't ignore the unexpected financial curveballs life throws our way, whether it's a sudden medical bill, car repair, or an immediate travel. Finally, not everyone has been schooled in the art of money management. Without that financial know-how, it's easy to fall into the borrowing cycle without really understanding the potential downside. And though debt slavery isn't as extreme as human trafficking, it can still really knock its victims down and cause a lot of damage. The weight of debt hanging over your head may significantly affect your mental health and overall well-being. The emotional burden it places on you can seep into every aspect of your life, messing with your relationships, work, and personal happiness. 60% of Americans surveyed claim that their debt is the biggest source of their money worries. Borrowers often experienced increased anxiety, guilt, stress related to heart function, and thoughts of death, according to a study by Science Direct. In another survey of over 1,000 student loan borrowers, 70% reported that they were suffering from depression, nervousness, insomnia, and self-isolation tendency because of their debt concerns. As their fears increased, they also faced physical issues like headaches, upset stomachs, muscle tension, and overall fatigue. Besides, many people are unsure if they can handle their financial obligations. And for those already struggling to pay off debts, it can lead to feelings of shame, guilt, and financial irresponsibility. These feelings can seriously impact one's self-esteem. But these money duties may also affect our decision-making in surprising ways. People in debt tend to take more risks, possibly worsening their situation even more. While having luxury stuff may seem like a sign of wealth, there's a cloud of shame and stigma surrounding debt, which can strain our socializing and relationships. Have you ever hesitated to share your financial worries with friends or family, fearing judgment or pity? You're not alone. We just don't talk about it. And while people openly share their genius investing ideas, borrowing seems like the last truly taboo topic. This can get in the way when you're seeking support for your struggles. Our culture implies that the rich and successful are morally superior. But this perception needs to change. Having money issues doesn't make people any less. Emotions can especially get tangled up when you borrow money from a friend or a family member. For sure, lending money can show you care and want to support someone. It's a way of saying, "I've got your back." But there's also that saying,
"If you want to destroy your friendship, borrow from a friend."
In fact, about half of those surveyed by the Money and Mental Health Center said borrowing from friends or family hurt their relationship. Well, getting a loan for education or a business venture may be a good move for the future, potentially leading to better income. But borrowing to pay for unnecessary goods or even a meal at a restaurant is a very, very bad idea. Remember that by borrowing, you actually steal from your future self. In the long run, debt can hold you back from building wealth and financial security by making it tough to plan ahead and save money, let alone invest. In many cases, credit obligations can become a real pain in the ass. Maybe your situation changes and a debt that used to be perfectly manageable is suddenly too much. Or maybe you took it on when you shouldn't have. Or the loan just wasn't right for you. But zoom out for a sec. It doesn't just mess with our wallets. It messes with the whole economy. Some say loans drive the market. But when everyone's in the red, it leads to less spending, hurting businesses in a big way. It also puts the entire financial system at risk. For instance, the Great Recession of 2007 was set up by the improper mortgage marketing in the United States. Living on borrowed money and credit cards can become a real addiction. When you get used to swiping that card or taking out loans for every little thing, it's tough to break up that vicious cycle. To go against our debt culture is to threaten the very basis of our society, and even impossible in a culture where how much you can borrow is more important than how much money you actually own. But still, how do you f the system and gain your freedom? The tips are as old and simple as the 10 Commandments. However, they take a lot of discipline and willpower. And here they are. Take stock of all your debts and create a solid plan to tackle them. Stick to this plan so you can get rid of current debts as soon as possible. Then focus on budgeting. Keeping track of your spending and finding ways to trim unnecessary expenses can free up some extra cash and gain your financial confidence. You can pick from so many budgeting apps to make things easier. A crucial one: do not splurge on unnecessary fancy stuff that's out of your budget. Spending less than you make and living within your means is a key to financial independence. Next, build up a safety cushion. It's a game changer that keeps you from going into debt when unexpected expenses come up. And you should make saving money your habit. Save at least 10% of your earnings. Plus, find ways to boost your income, like getting a better job, doing a side hustle, or making investments. Financial literacy comes in really handy here. Check out books, watch YouTube videos, or chat with money-competent people. Just be careful with whom you trust. There are lots of scammers out there. Some good books to start with are classic Think and Grow Rich by Napoleon Hill, A Guide to Personal Finances: The Road to Financial Freedom by Bodo Schäfer, and The 7 Habits of Highly Effective People by Stephen Covey for general self-development. But that's just my personal recommendation. You can find what works best for you. And once you're debt-free, stay that way. Ignore the idiotic public opinion, flashy ads, and two-faced influencers. Use your own head making wise decisions, so you never end up broke again. Getting out of debt is all about taking control of your life, lessening stress, and setting up a more stable and secure future for you and your family. Totally worth it. I hope you guys found this video useful. If so, don't forget to hit that like button below and subscribe for more thought-provoking content. Good luck with your personal finances and stay tuned.